Good morning, everyone watching live on BAM YouTube. Let me know in the comments which market you are tuning in live from today. The hot sheet covers what you need to know about the real estate industry in a 24-hour time period. And on today's hot sheet, I will discuss purchase applications and housing inventory, where we are for the last week, the home market correction, and Home Depot's Q4 earnings. Today is February 21st. It's a Tuesday. I'm Byron Lazine, and the hot sheet starts now. For those of you that were looking for the hot sheet yesterday, my apologies. On Friday, I forgot to mention or remind everyone that we only do the hot sheet when the markets and bond markets are open. So yesterday, with the holiday, stock market, bond markets were closed. So the hot sheet was closed. We'll continue to follow that throughout the year. So typically Monday through Friday, you can expect the hot sheet every single day, as today, live at 9:30 Eastern time. Hit the thumbs up if you appreciate that. But when the markets are closed, we will be closed down for the hot sheet. Okay, please consider sharing this video with someone who can benefit from a 24-hour look back on everything housing and what's going on with our market. That's the best way to support us right now. All right, let's take a look at the housing market tracker from Housing Wire that went out yesterday. Logan Motoshami posted it in the afternoon yesterday. And I want to take a look at, as we follow every single week, what's going on with purchase applications and inventory. Purchase applications fell 6% weekly as the market digested its first round of higher rates. Looks like they're going to be up again here to start this week. We'll talk about where the 10-year is as of this morning at the end of this show. Weekly housing inventory fell once again by 6,858 units over the last week, keeping the post-2020 theme that housing inventory bottoms out a bit later than usual. The expectation right now is that we should start seeing inventory accumulate. It traditionally does in the spring. Since obviously 2020 was an abnormal year, I'll just take that one out because everything happened much later. But in 2021 and 2022, this trend of inventory coming on the market happened later and later in the spring, and it's once again happening. We really need to, we were hoping for this year in 2023 to get back to more of a, pre-2020 timeframe where we're going to start to get inventory in February. We're not seeing that yet. We're still seeing inventory go down. We really need to be off to the races as it relates to inventory in March. We start to get that with these high interest rates and inventory coming on the market. You will see enough pressure on price where overall it comes down in a much more significant way for home shoppers. Any home shopper right now, shopping in certain markets where they're really at the median or below median price point, they're not feeling it yet. And one of the reasons they aren't feeling it is there's no inventory. There's no competition. Overall demand, we know, is down 42% on the year. Okay. Let me know in the comments if that is reflective in your market. Is overall demand down, but is inventory, the lack thereof, pacing ahead of it so much that it feels like there's still high demand? Okay. Obviously the mortgage rates have gone really high here, and we may hit 7 this week. That was my prediction last week. Last week we saw the purchase application fall 6%. It's down 42% year over year. So demand down 42% overall for mortgage buyers. Basically we saw a little uptick, but now we've bounced down. So we are not like, and this is the mortgage application chart, we're not like seeing, that uptick we saw in January be the story for the whole spring. We've now been, a few weeks in a row where we're consistently down on mortgage applications. You can see the inventory. We thought we hit this one little inflection point. All these charts will be down below for you in our daily download link, where you can get everything all in one link. I thought this might be the inflection point right here that we saw coming into the year, and that we might pick up and get off to the races, start accumulating inventory, but we dropped down once again. We really need to have this bottoming out that you've seen in 2021 and 2022 and start to accumulate that seasonal inventory. The weekly inventory change is down from 443,000 plus to 436,000. That's for a population in America of 330 million. There's 436 available housing units. I'd argue how many of those are actually good housing units. Same week last year, we were at 249, and we dropped down to 247 last year. Okay, so last year was the all-time low in inventory. This would be the second all-time low right now, where we're currently sitting for actives. Okay, if you look at this number here from NAR down below, this shows you all the total houses on the market, right? So 970,000 would include the the houses that are also under contract. Last year we had an all-time low of 860,000. This number comes out later today, so we'll talk about it tomorrow. There's a lot of thought that we're going to be below that 970, maybe not as low as 860, but we're going to get somewhere in between there is potentially the read. One of the reasons for this is this new listings. We're not getting enough new listings onto the market. In fact, we have less new listings than at any point the last 5 years. 2019, we had 65,000 new listings for the week compared to other years. 2020, 62,000. 2021, we had 50,000 across the country. Last year, in fact, when we saw this low inventory number, we had 49,159 new listings for this week. This year, we have 42,769. This is what I've been talking about for a long time. People that are locked into 3% interest rates, the majority of the country has all this equity in their home and they're sitting on these interest rates. What's the incentive? It's hard for them to move up when the interest rate is 7%. If I'm sitting, I just did this exercise with my sister. She's a senior editor over at BAM. Give Vanessa a shout out in the comments. She's one of these home shoppers that is struggling right now because she's been shopping for a very long time and now she sees interest rates up. I said, Vanessa, the house that you just put an offer on, this is right before the show, the mortgage payment would be higher than the mortgage payment I have on a property that I bought 2020. And this property that I own down here is worth 3 times the value of the property that she was making an offer on because of how low the interest rate is. So say I wanted to move up. If I needed to sell this property to move up to the next price range, because my interest rate is so low, it'd be very difficult to move up at a 7% interest rate, which means you stay, you kind of stay put, which creates this lower level of inventory, right? And so the home shoppers right now are paying significantly more. In fact, and this is true in a lot of markets. It wasn't true a year ago. It was not true a year ago in quarter one when we saw these crazy bidding wars. But where this quarter one is different than last quarter one, where 2023 is different than 2022, it's cheaper to rent in almost every single market than it is to buy. Going back to the example with my sister, her rent is about $2,000. Okay. If she were to get the price of the home at the winning offer, this particular property she made an offer on, she didn't win the offer, she'd be almost $800 more on her mortgage to buy the same floor plan, essentially, same square footage, single family home versus an apartment. Yes. But essentially the same square footage would be 800 more in that market. It's a market in the Northeast where there's very low inventory. Okay. And this is the case in almost every market. When you go long term, absolutely. If you're going to be in the house for 10 years, there's going to be benefits to buy. I'm not saying people should be renting, but this is the decision right now that home shoppers are faced with, especially if they're living, and this isn't the case for my sister, but if they're living paycheck to paycheck, like 64% of Americans. Well, do I save $800 a month by renting? And that impacts my year, 2023, greater than not, continuing to rent, than going out and owning. Owning would be, long term. But if you're not having that house 10 years, then there's a debate, whether that's the right thing. So the affordability issue is getting absolutely out of control. We'll drop this chart down below, this new listings chart, where you can see here over the last 5 years, 2023 is below all 4 of the prior years for new listings at this time. This is a chart right here that I'd be using with sellers who have hesitancy to be first out in the spring market. Trust me, with where interest rates are, and at the end of the spring, if we do have this seasonality pop in inventory, we will see enough pricing pressure where prices have to come down. So if you're a seller selling at the end of the spring market as opposed to now, outside of below median price points, I just believe you're going to sell your house for less. It's what all the tea leaves are pointing to. Let me know in the comments what you think is going to happen in your market. What Fortune believes, and Lance Lambert, and you can follow him on Twitter at News Lambert, believes is going to happen is a housing correction taking a new turn. He believes it just took a new turn. He reported this in Fortune just yesterday. Okay, so he believes we're passing through a home price correction. Okay, we still think there's more price correction to come on the resale side. This is according to a John Burns real estate consultant. Okay, Rick Palacios of John Burns. Okay. Unlike home builders, we need to cut prices who need to cut prices in order to move unsold inventory. Existing homeowners are usually more resistant to such cuts. The resistance is why existing home prices usually bottom out and last in a housing market downturn. Okay, so we've seen builders in Q3, Q4 in some markets start to put incentives in, negotiate on price for the first time, right? Coming into this year, that was a common theme in many markets. Okay, I know in Austin, Texas, for example, that was a common theme. But resale, right? Homeowners who own a home haven't negotiated as much. There's been some in some markets, but not as much because they can sit and wait, right? Especially if they're at a 3% interest rate. Well, if it doesn't sell for my price, if I don't get my terms, I'll just keep the house, right? Maybe I'll think about doing an addition, which there's signals we'll talk about in just a minute that would hedge against. Maybe there's not going to be as much people doing that this year. Okay. But let's take a look at a closer look at the ongoing correction. This chart will be available for you down below in our daily download link. We're passing through a home price correction. Percentage of major housing markets. So these are just major housing markets with positive or negative month over month home price growth. You can see the line here, what we're going through right now as we go into 2023. Okay. So for the first time since 2012, when we bottomed out from 2008 to 2012, we have a pretty significant spike in major housing markets having some type of home price decline. Okay. It doesn't mean that they're down 10%, but it just means they're down. And it really, in a lot of these markets, there was no other place to go. You had to go flat or potentially even down, right? So that's where we're at. January 2023, 40% of the nation's 200 largest housing markets registered month-over-month decline in home prices. For 124 consecutive months, spanning the bottom of the previous housing bust in February 2012 through the top of the pandemic housing boom in June 2022, the price of U.S. existing single-family homes is measured by the seasonally adjusted Case-Shiller National Home Price Index, posted positive month-over-month price growth. That streak is now over. Okay, so through the latest reading in November 2022, existing single-family home prices are down 2.5% from June 2022's all-time high. Okay, in October, 76% of major housing markets saw a home price decline. November, December, 64 and 67%, so less. January, just 47%. So it's easing up a little bit. This chart here shows you this shift in home values since peak in 2022. You can see it, some pockets in the Northeast. Look at Connecticut. Look at little tiny itsy bitsy Connecticut. Still blue. Hasn't seen its price drops yet. Probably coming. Okay. Maine, parts of New York haven't seen it yet. Boston has seen it. Boston, being a big city, has seen it. Southeast Florida hasn't seen it yet. In fact, we talked a bunch, but Goldman Sachs believes Miami's going to go up again this year. But the west coast of Florida, after Ian, has seen it. The west coast of this country, this is where it's seen price drop significantly. And if we just think back to every housing market adjustment right now, we know that the West always has these price drops first. Okay. It happened in the last cycle. And listen, this cycle is nothing like the last cycle. We're not going through a mortgage crisis, but the West always happens first. It's just traditionally the way it works. Seems there's some, Charlie says, it seems there is some comfort, excuse me for not being able to read. I'm squinting here, with a 3-month trend in the sixes. There's a lot of activity right now. I completely agree. Things may change in the spring with inventory additions, price pressure. Yeah, Charlie, I agree with you. People have gotten out into their seasonality. Buyers come out this time of year. It's what happens from now till May. You see overall home purchase applications go up. We've seen the last few weeks they go down, right? They're up a little, overall for the year, but you will see more buyers this time of year. I'll be interested to see during this peak buying season, this traditional peak buying season, when we hit up over 7%. If we do hit up over 7%, I think we will this week. What happens to some of that demand right now? And if it does give a chance for inventory to build up, I agree with you overall. There's serious buyers out there. Is it down 40% from last year in terms of how much demand there is? Absolutely. Mortgage purchase applications show us that. But the demand that is out there is serious, and the inventory being so low creates a little bit more, wow, there's a lot of demand, where we've got to take into consideration that it's more of a normal level of demand, but with really low inventory, which makes it seem more extreme, if I'm making any sense there. Okay. So we'll see what happens. If we get closer to 6, Charlie, I agree, off to the races. We saw that in the beginning of the year. We get to 6% mortgage rate. We had that one day 5.99. That was like the peak level of activity for 2023. We see that again, it's going to be off to the races in a big way. We're going to need some inventory to support that. We're going to get into an unaffordable situation. Okay. You may be walking through Home Depot aisles these days and think everything's unaffordable with what the prices are. And Home Depot, though, just reported revenue and they missed on revenue. Okay. They also say they have a muted outlook. I thought that was very interesting. It's the only reason I'm popping it into the hot sheet. We typically wouldn't cover Home Depot's missed earnings on Wall Street, but I do believe their outlook, the company attributed the flat outlook to a tougher consumer backdrop and a pivot away from goods toward services. Okay, so Home Depot believes that in 2023 they're going to be flat, which tells me they don't believe a lot of people, even all these people that are staying put in their home, are necessarily going to go out and do a renovation. Some people will, certainly, and flat from last year is still pretty good. They had a monster year last year, but they don't believe that with this increase of potentially people staying put, lower transactions on real estate, that's going to spur some type of huge need for people to go out and buy goods from Home Depot to go and have service contractors come in and work on their house. Listen, I think in every market we can agree it's hard to find a contractor and they're going to have a very good year. Home Depot just doesn't believe this is going to be even, abnormal or above last year. They're saying it's going to be flat. I thought that was interesting. Note from them. All right, let's note where we're at on this 10-year today. Before the show started, we were up significantly, and oh boy, we are running here pretty significantly on the 10-year. We are now at 393 on the 10-year fixed. Listen, this thing hits 4, which we're up a full look at it, just went up again. We hit 4. We're going to see a 7% interest rate. Okay, that's what I believe. I can't guarantee that. We may hit 7% today, by the way, being up a full basis point here. So 3.936 on the 10-year. I don't know if that's the highest. It's probably definitely the highest all year, right? That's a high mark. Okay, we were trying to get under 3.42. We're a long ways away from that. We were almost there when we were at 5.99. Right? If we got down under 3.42, there was a feeling that we'd get to 5.5% interest rates. All of a sudden now looks like we're going to be at 7% interest rates. And I believe today we could hit 7. We ended the week last week at 6.8. Full basis point today tells me, yeah, we'll definitely be at 6.9. Could be at 7% on the 30-year fix later today. We'll see what happens. The markets are down big. Stock market's down almost 400 points. It's all based on these higher interest rates. Okay. The Fed's going to meet in a week and a half. A lot of people believe the FOMC, they're going to jack up this federal interest rate even more than the 25 basis points that they've been doing. They're probably going to go to a, to a half a basis point, 50 basis point hike. Obviously you got some news with the war going on. That's probably also not very supportive of the economy and the stock market overall. So there you go. That's how we're starting this week out here on this Tuesday on the hot sheet. It is what it is. Be armed with the data so that you can better inform. We're going to go deeper on that fortune piece, the correction in the housing market on today's Real Word. So that'll premiere at 2 p.m. Eastern. Nicole is back, by the way, after her 1 week absence. She'll be back with me on the Real Word. Don't miss that. 2 p.m. Eastern. Hit the thumbs up if you enjoyed this. Please consider sharing it, and I'll see you back here tomorrow live at 9:30 a.m. Eastern. Till then, toodaloo.